I just finished reading the 132-page Ark Invest Big Ideas report, and I did it so you don't have to. So coming up are the key details of what Cathie Wood thinks the next 10 years might bring for us crypto investors. And if half of it turns out to be true, well, in 8 years, you'll be doing exactly what you are doing today, wishing that time travel existed so you could go back 8 years and load everything but the kitchen sink into crypto. Not saying you should do that now, but coming up are some pretty wild speculations, which are all the more fun given that Cathie has been right before. For those that don't know, Cathie Wood is the badass woman who predicted that Tesla stock would go over $4,000 per share when it cost just $300. Everybody made fun of her, wrote her off, but it proved right, and now she's a household name, having created the Ark Invest platform, which offers ETFs for cool people, people that want to invest in the genomic revolution, next-gen internet, and artificial intelligence. People that have their eyes set on the future. A good one for spotting that that's actually Bruce Jenner, not Cathie Wood. But hey, we've never seen him in the same picture. Now, before I give you the heroic dose of hopium, let's go back to the 2017 Big Ideas report. And it's actually relevant today because back then people were also shaking their heads and pointing their fingers that this woman must be out of her mind. Because back then Cathie Wood estimated that the total crypto market cap would reach somewhere between 1 to 5 trillion in the next 10 years. Now, considering that the crypto market cap was only 15 billion back then, it seemed pretty preposterous. But she was right, and it did reach this target back in 2021. So it took just 4 years to reach this target instead of 10. And other predictions proved right as well, like deep learning stocks, mobile payment stocks, and gene editing stocks. Now, if that sounds something you're interested in, let me know in the comments section so I can make a deep dive on the Ark's ETF offering. Because today, we're focusing strictly on crypto. Keep in mind the current market cap is just $1.9 trillion. So where does Ark see this market cap being in 2030?
4, 5, 6, 7, 8, 9.
Nah, a little bit higher.
19, 20, 21.
Still higher.
47, 48, 49. Yeah.
Dead on. $49 trillion by 2030. But yeah, a huge increase. All in all, over 2,300% more than it is now. And according to this report, 57% of that market cap will consist of Bitcoin alone. So that puts Bitcoin at roughly 28 times more than its current market cap, which puts Bitcoin at roughly 1.36 million per coin. Now, there are some pretty interesting theoretical and mathematical models of how they arrive at this number, but here's the breakdown. I'm sure Peter Schiff would disagree, but Ark says Bitcoin will become the new digital gold, accounting for about 50% of gold's market cap, which is roughly 5.5 trillion. Next up, Ark believes that more and more S&P 500 companies will continue to add Bitcoin to their balance sheet, just like Tesla did. They estimate around 5% of balance sheets will be kept in Bitcoin, which adds another 4.2 trillion. Another 4.1 trillion will come from institutions keeping around 2.5% of their assets in Bitcoin. Another 4 trillion coming from ballers, aka high net worth individuals, which will keep around 5% of their portfolio in Bitcoin. 3.8 trillion coming from countries keeping 1% of their reserves in Bitcoin. And then there's US banks who always want a piece of the pie and will use Bitcoin for around 25% of interbank settlements, which adds again 3.8 trillion. They also expect that Bitcoin will account for 50% of all global remittances, sending money back home if you're a foreign worker, for example. This will add just a tiny 300 billion. Finally, the El Salvador example will have caught on, and Bitcoin will replace fiat currencies in emerging markets at a rate of around 10%. And this last one is already proved by the success that El Salvador saw when it implemented Bitcoin. At least on paper, because keep in mind, I'm not from El Salvador, I don't have boots on the ground, so I really don't know the whole situation, but I do know this. Just looking at the data, there's almost double the amount of people with Bitcoin wallet compared to a traditional banking account in El Salvador. As of October 2021, these accounts are settling around 2 million in transaction volume each day, which on an annual basis equates to around 2% of El Salvador's GDP. That's a lot of settlements. And if you need to know how much of this market share Bitcoin is gaining, well, last year they actually surpassed Visa for the first time in history, with 13.1 trillion in transaction volume compared to Visa's 12.5, which is around 5 times increase from 2020 when there were just 2.3 trillion in transaction volume for Bitcoin. And again, that's about 463% increase in just 1 year. Now, who are these people using the Bitcoin network? Turns out it's not day traders and speculators, because Ark found out that 13.5 million Bitcoins out of the 19 million total in circulation is being held by long-term investors. They define it as people who hold Bitcoin for over 155 days. This means that despite the short-term trading potential, it is still long-term investors and believers, possibly sharing a similar vision to Ark, that ultimately make up the most of Bitcoin holders. This once again solidifies the idea that the majority of the people see this as a long-term game. And keep in mind that cryptos, perhaps more than any other asset class, are valued based on the public perception, what the majority of traders or investors are seeing. So they're seeing a long-term game. Consider this as well. The market cap for the S&P 500 was roughly 40 trillion at the end of 2021. Since the 1950s, it's grown at a rate of about 10% each year. If we just assume that this trend continues, by 2030 the market cap for the S&P 500 would be roughly $99 trillion. Considering how many companies are now shoving their money into cryptos, especially Bitcoin and Ethereum, the 49 trillion market cap doesn't seem so outlandish anymore. It would still be half of the 500 most valuable companies in the United States. Now, if there is a criticism of Ark's investment strategies or perhaps their future outlook, it is the fact that their ETFs have erased the previous gains and retreated quite a bit in the last few months. That said, they are outliers in this space. They do not go by the traditional valuation metrics that many stock analysts use. They don't use standard valuation metrics because the companies they are invested in are not standard by any means. And the thing that they do believe in most is convergence. It is the way that many different industries overlap and intertwine with one another to boost growth and boost innovation in one another. So by 2030, we're looking at the blockchain technology closely converging with the Internet of Things and digital wallets, both of which are converging with the mobile connected devices. Another bet that they were right on in the previous Big Ideas reports. And in the dead center of things is artificial intelligence, which will be like the core driver accelerating growth in all of these different industries. I did make a video about AI investments a while back. It still stands relevant today, so if you want to check it out, please do that. Or you can just take the screenshot if you're just looking for straight up investment ideas. So again, it's not only the usage of Bitcoin or various other cryptocurrencies, it is the convergence of how these technologies work tightly together with one another and boost innovation across the board. And they believe blockchain and digital wallets will be one of the main pillars boosting growth and innovation in the technologies of the future. And just think of the last 10 years in terms of innovation. 10 years ago, there was no autonomous driving, there was no gene editing. Crypto was something for dark web users, basically. And AI was a thing for sci-fi movies. Today, your grandma knows what crypto is, and pretty much everybody knows that Elon Musk is working on a brain chip that will allow us to communicate without language. Also consider this. If a 49 trillion market cap sounds ridiculous, in 1998, the total tech investment in the United States was valued at around 10-15 billion. Last year, there were $621 billion invested into tech just in the United States. So we have to think of this as another industrial revolution, caused in part by the blockchain technology. And this next graph shows the way Ark sees this. And it actually totally makes sense. So before the internet, we had the TV, the radio, and the newspaper. Then when the internet came, we still have all of that, but everything is also moved to the internet. Things like online TV and online radio. Their vision states that blockchain technology will do just that, not only for businesses and for other things, but also for asset classes as well. So if you're just a traditional investor, or perhaps you're still new to this game, basically the basic benchmark for success in the markets is beating the S&P 500, which returns around 7 to 10% each year. If you can exceed that, you're good. But why not take it up a notch? So what I'm thinking, if you're already a Bitcoin investor, or if you just want to start out, keep holding, keep dollar cost averaging, keep mining, because this tech is going nowhere. And those who stick to the game plan will benefit in the long run. This is a long-term game, so just stay positive, keep stacking up, keep buying the dip, whatever it is that you're doing. And if Bitcoin is not your cup of tea, just keep saving money, because you never know when that huge opportunity, that new crypto will come around and shake everything from the ground up. It literally may come tomorrow. As always, there's the trading game where you will get the latest updates both on Bitcoin and any new developments that we have in the crypto space. So if you just don't want to miss out, you can always follow our daily updates. So thank you for watching, guys, and thank you Cathie Wood for keeping us motivated during the recent market crash. I'll catch you next time.